Welcome everyone to this Sub-Saharan Africa public dialogue on InsurTech, catalysing access to financial services following Covid-19. I will start promptly as we do have quite a packed agenda today. So this public dialogue is jointly organised by the Access to Insurance Initiative, the A2I, the International Association of Insurance Supervisors, UK Department for International Trade, FSD Africa, Senfree and the UK Nigeria Tech Hub. My name is Pascal Lam. I work for the A2I and I have the pleasure of guiding you through today's virtual dialogue. To give you a quick overview of the programme today, we'll start with introductory remarks from some of our partners. Then the first session will be an overview of the InsurTech outlook that will be followed by a fireside chat with innovators. For our third session, we will then see a shift in perspectives by exploring the role of supervisors and how they can regulate innovation. At 2:30, we will then have a virtual coffee break before heading into our breakout sessions. We will then conclude today by regrouping after the breakouts with some concluding remarks. Just as a reminder to participants, when you registered for the event today, you also registered for a breakout session. If you have any questions concerning the breakout rooms, please feel free to message either me or the A2I Secretariat in the chat to ask any questions. We'll be happy to answer them. Other additional housekeeping to be aware of, this dialogue is being recorded. Participants are also muted. This is to improve the audio quality and prevent background noise. But should you wish to ask a question or make a comment, please feel free to raise your hand and we will unmute you. Otherwise, please feel free to use the chat function to ask questions. For any technical problems that you might encounter, please contact the A2I Secretariat via the chat function or email the Secretariat at a2i.org. We'll include those details in the chat as well. Please also see a poll should be going up on the right-hand side. If everyone could quickly participate in this so that we can have a bit more of an idea of who is in the audience today. That should be coming up very shortly in about two seconds. In the meantime, I'd like to invite some of our partners for their introductory remarks. We have with us today Connor Donaldson, Head of Implementation at the IIS, Lami Adekola, Acting Country Director from the UK Department of International Trade, and Thomas Birches, Assistant Director from FSD Africa. And we also have Hannah Grant, who is the Head of the A2I Secretariat. Hannah will start off and say a few words, and I will then pass on over to Connor, Lami and Thomas. Hannah, over to you.
Thank you, Pascal, and a good morning, good afternoon to everybody else. I'm delighted to have this opportunity to welcome you to this seminar on InsurTech, catalysing access to financial services following COVID-19. For those of you not familiar with the Access to Insurance Initiative, we are the implementation part of the International Association of Insurance Supervisors on Financial Inclusion, and we work with insurance supervisors to help them create a more enabling environment for financial inclusion and thus close the protection gap. Our partners, we actually started planning today's events probably back in February, the physical event alongside the AIO event in Nigeria. I think none of us could really have imagined how much things have actually changed since. However, the topic of today's event, InsurTech, if anything, has actually become even more relevant. COVID-19 has promoted and necessitated many insurers and their distribution partners to accelerate their digital transformation and provided new opportunities for InsurTechs. This trend is also seen in insurance supervisory authorities. In a recent A2I survey, 60% of supervisors responded to indicate that they were enabling digital transformation as a result of COVID-19. It is also notable that despite the COVID-19 outbreak and the pandemic's economic fallout, that total InsurTech investment through the first half of 2020 has actually been as robust this year as it was in 2019. With a record level of $2.2 billion funds raised, according to a recent Deloitte study. This, I think, demonstrates the potential of InsurTech and thus the interest of investors to continue to invest despite the challenging economic circumstances. However, without an enabling regulatory environment, all of this investment would fall by the wayside. InsurTechs and the innovations they represent offer new opportunities, but they also present new risks to consumers. And it is therefore understandable that supervisors may be a little cautious about approving new products or granting licenses to entities that they have little familiarity with. So close dialogue between InsurTechs and supervisors is therefore essential to ensure that the opportunities presented by InsurTechs of improving access to more consumer-centric products are not missed. So I'm therefore very excited about today's event, and I look forward to the discussions. Thank you.
Thanks, Hannah. And the poll is now live, so if people could fill that in, that would be much appreciated on the right-hand side of your screen. In the meantime, welcome, Connor, and please go ahead.
Despite all of our advancements and becoming more comfortable using WebEx, it still takes a while for users to find the mute button, which is not always a good sign, but nevertheless, I'll go on. Hopefully everyone can hear me clearly now. So my name is Connor Donaldson. I'm the head of implementation at the International Association of Insurance Supervisors. And I hope everybody on the call today is keeping well, despite some of the ongoing challenges associated with the current pandemic environment. I'm very pleased to offer today some words of welcome on behalf of the IIS to this timely and important dialogue. Over the course of 2018 and 2019, the IIS developed a new 5-year strategic plan. During this time, we recognized the challenges and opportunities of rapid technological change and innovation, and how this would be an important theme for insurance supervisors and consequently for the IIS over the coming 5 years. A lot has changed, however, since we adopted our strategic plan in the middle of 2019. The pandemic has accelerated the demand for and supply of digitalized applications to maintain the ongoing resilience of insurers, and as well as to ensure the timely delivery of uninterrupted high-quality services to policyholders. With insurers having to shift an increasing number of business activities online, we've seen an acceleration of technological innovation and the digitalization of the insurance business model. Additionally, workforces have transitioned to large-scale remote working, which has tested the preparedness of insurers and the effectiveness of business continuity planning in protecting employees and reducing service interruption. However, technological innovation can also heighten existing risks, such as the potential for negative discrimination, exclusion by data-driven automated decision-making, and increased cyber fraud and data protection risks. I'd like to take a moment just to highlight some of the important considerations for the supervisory community. Technological deployment has reinforced the need for supervisors to ramp up their own efforts to enable the digital transformation of the sector is done in a meaningful and responsible way. This includes ensuring that supervisors have the appropriate set of digital skills and the supervisory tools to respond to the increasing pace of digitalization currently being experienced by the sector. Supervisors have also been called upon to understand potential regulatory barriers that could impede the transition to more digital business models. In particular, supervisors must be appropriately equipped to address emerging and heightened risks insofar as they relate to, among other things, the fair and ethical use of data, digital consumer rights, changing market structure and competition issues resulting from big tech entrants and big data network effects, oversight and accountability for algorithm-based decision-making, outsourcing of technological services, and of course, cyber resilience and the increased potential for fraud and cybercrime. Addressing the challenge of rapid technological change and innovation will continue to be a strong focus for the IIS. We are looking at how best to incorporate insights and lessons learned from the crisis into our existing work program across the relevant IIS activities, and in order to build on the significant foundational work already undertaken by the IIS in this area to date. I'm very pleased that this dialogue has been organized by the A2II, and very pleased that we've been able to rely on them as an implementation partner for the IIS in supporting financial inclusion, as well as to supporting dialogues with supervisors and stakeholders on timely topics such as innovation in the financial services space. I would like to close by just saying a big thank you to Hannah and the team at the Access to Insurance Initiative, as well as to the UK Department of International Trade, as well as all of the speakers who are on the call today and are willing to share their insights with the participants in this discussion. So with that, Pascal, thank you very much, and back over to you.
Thanks, Connor. And Lami, welcome, and please go ahead.
Thank you. I'd like to welcome everyone to this very, very important event at a critical time in the world generally. We all know the COVID impact and how economies are surviving. My name is Lami Adekola. I am the Deputy Head of Department for International Trade in Nigeria, and I'm also the Director for Financial and Professional Services across Africa, and totally delighted to be here today. Insurance is a critical sector for every economy. However, the African countries' insurance penetration is still relatively low at around 2.8%. And to be able to bridge that gap of insurance penetration, technology is required. Hence the importance of today's conversation on InsurTech. So who holds the pen with respect to getting the InsurTech space moving forward? Is it the regulators being the telecommunications regulators, or the financial sector regulators like the central banks and the Ministry of Finance? We need to have this conversation to make sure we get a convergence of regulation and having the right people at the right places, putting in the right policy to encourage InsurTech. And we as the UK DIT are essentially keen in bringing in more UK diverse expertise and experience in the insurance space and InsurTech space specifically, and help deepen that market. I am excited today to also talk about the Tech for Growth program that we have, which is a UK government program aimed at supporting the tech industry and ecosystem in Africa, and most importantly, also promoting the UK as a destination for any tech firm with regional or global expansion plans. So would want to encourage you to find out a little bit more about the Tech for Growth initiative. Contact us, get in touch, and let's see how we could work together to actually advance not just the InsurTech space in Africa, but the larger tech and financial services sector on the continent. I'm eagerly looking forward to today's discussions, and I'm extremely positive that we will gain serious advancements with respect to the dialogue we'll be having with the regulators and operators and everyone. Welcome to everyone again. Thank you.
Thanks, Lami. And Thomas, if you'd like to go ahead.
Yes, thank you, Pascal. So good afternoon, good morning, everybody. FSD Africa is very happy to support this important dialogue. FSD Africa is a specialist development agency for the financial sector. We are supported by the UK government through UK Aid. We're based in Nairobi, working since 2012 to build and strengthen financial markets across Sub-Saharan Africa. The reason and the ultimate intention why we're doing this is because we believe that healthy financial markets are a foundation for a fair and a thriving economy. And as we are all seeing, this is even more important during times of a pandemic. So over the last couple of months, FSD Africa has carried out research into how the pandemic is affecting the insurance sector across Africa. And as regards regulation and supervision, we are finding that, of course, insurance regulators had to explore a range of options to ensure that they are able to fulfill their core mandates, which are, of course, as we know, market stability, consumer protection, and in some cases, at least, insurance market development. The pandemic has disrupted everyday operations of insurance supervisors and regulators, as well as, of course, the insurance companies themselves. For the regulators and supervisors, there has been quite a drive to adapt to remote supervision and communication, and generally to deal with increased uncertainty and to some extent instability in the markets. I think that what companies and what regulators and companies have to adapt to is to find a balance between offering regulatory relief and dealing with this new type of regulation in the market, and simultaneously monitor the vulnerabilities in the markets to ensure that consumers are protected. There's a big potential in InsurTech, and we are seeing several regulators and supervisors to encouraging or requiring even regulated entities to innovate and digitize not only their internal processes, but also the customer-facing processes and operations, as well as their products. And as such, we are looking forward as FSD Africa to the discussion today, and we are very open to enter discussions about how to support regulators and supervisors to handle the crisis and the opportunities and, of course, problems that arise from it. Thank you.
Thank you, Thomas, and thank you to all our speakers. But more generally, also thank you to all our partners who have put in a lot of time and work into delivering this dialogue today. The polling results are in, and before we head into the next session, I'll just go through the results. So the audience today mainly consists of a mix of supervisors, being the most popular participants, industry, and also donors. I think that proves once again how topical InsurTech is at the moment. So this brings us nicely to our first session for today. We are very fortunate to be joined by Herman Schmidt from the Cambridge Centre for Alternative Finance, CCAF. Herman is a development economist and behavioural scientist with more than a decade of experience and has extensive experience collaborating with the World Bank and the World Economic Forum, amongst others. At CCAF, Herman is responsible for delivering the research agenda and data strategy, and we are very lucky that he is going to be presenting early extracts from CCAF's Global COVID-19 Assessment Survey. This data is not yet public, so just to highlight that this session is being run under Chatham House. We ask participants, therefore, to refrain from sharing this information until the data set is officially launched early next month. Herman, perhaps you can share the publication date with us if you have it at hand, but otherwise, a very warm welcome, and the floor is yours.
Thank you so much, Pascal. And I want to just thank all of the conference organizers. I know that a great deal of effort has gone into this. So to the A2II, to the IIS, to FSD Africa, to Century, to the DIT, thank you so much for creating this opportunity for us to discuss what is a very timely and important topic of how the financial sector is evolving, how technology in the insurance sector is contributing to what might look like a very different InsurTech sector over the next couple of years than we've had to date. I think there's a number of questions or topics of interest which were raised as part of the introduction, which we have collected some data on. As Pascal indicated, this data is still preliminary, so we'll be releasing the final report at the beginning of next month. So we ask that you don't cite information from this report or from this presentation at this time, particularly not on social media. We'll definitely ask the A2II and others to make you aware of the publication date and make sure that you know where to find these results as they're relevant to your activities. So today I'll be, as indicated, take some data from a global study that we have conducted on fintech market activities over the last 2 months. We've asked just over 1,400 fintechs to provide us with some of their experiences during COVID-19 how have they been impacted by the pandemic, how have they responded to the pandemic, and really how has their relationship evolved with regulatory authorities in their market, both in terms of the regulatory innovation initiatives which they have been able to benefit from, but then also from the type of activities which they see can improve the relationship between themselves and the regulators going forward and strengthen their role ultimately in improving or extending insurance in the markets which they're operating, or strengthening the provision of insurance within specific geographies. Pascal, just on changing the slides. Okay, thank you. So I think you can go to the next slide. Thank you. Just to the overview. So just in terms of methodology, it was a set of 18 questions which we asked to Fintechs, which are broader than InsurTechs. So there's about 15 Fintech verticals which we looked at, from digital payments to crypto assets, digital lending, equity crowdfunding, and InsurTech was a component of this. Of the 1,428 responses that we will use from the survey, we had to remove some, obviously, as they didn't match the Fintech criteria. But of those that have been included, we were lucky to get around 100 InsurTechs, which primary activity was the provision of some function within the insurance value chain. There were a number of other firms which also supported the insurance provision, but we really wanted to isolate the market activities of firms which primarily were involved in insurance provision. So from these 1,428 responses that we ultimately used, around 100 of them is for InsurTech. Scott, if you can just move to the next slide. As you can see the distribution here, as you can expect, there are more of these, or the US and the UK and some of the more developed market at higher concentrations of InsurTechs. But around 17% of the global responses came from Sub-Saharan Africa. And here's a little bit of a data anomaly which makes it easy. There was 100 responses, so 17% means 17 responses from Sub-Saharan Africa. What's interesting is that while 17 firms reported being headquartered, around 50% of the firms that responded to the survey indicated some level of operations in Sub-Saharan Africa. So InsurTech's very interested, seeing a number of homegrown solutions coming out of markets in Sub-Saharan Africa, but then also large levels of interest of InsurTech firms that are headquartered in other parts of the world to be active in markets in Sub-Saharan Africa. So we're very lucky there to have 74 countries globally represented, 17 within Sub-Saharan Africa, 17 firms headquartered in Sub-Saharan Africa, and close to 50 operating there. Pascal, if you can just go to the next slide. So one of the key things that we wanted to understand is how COVID-19 has impacted the market performance of InsurTechs. When we started the study, we were quite unsure what the impact would be. I think as many other actors in the world, there's a lot of uncertainty that came into the system and a lot of different forces which could impact the overall activities of InsurTech. So we weren't sure going into the survey what the aggregate outcome would be. We had the benefit of firms needing to go digital, but we also had the economic impact and of COVID-19, which displaces incomes and priorities of firms. So really understanding what the net effect of this was on the InsurTech industry was really important for us. So we asked firms to report on number of new customers that they acquired, total volumes, so this is gross premiums, number of transactions, number of new corporate customers which they've taken on. What's interesting here is that the firms operating in SSA reported between the same period last year and this year a nearly 20% growth in number of new customers on their platforms, which means either because of COVID-19 or despite of COVID-19, there's been a large growth in the number of customers that benefit from InsurTech products. And this is roughly the same in SSA and across the world. Where we see some differences is in the B2B services. So we see that Sub-Saharan Africa firms in Sub-Saharan Africa had a slightly smaller increase in the number of corporate customers, which they've acquired over this period, whereas in the globally, this was on par with the number of new customers. The corporate customers in SSA were slightly lower. And then we also see a slight variation here just in the number of transactions, with InsurTech globally having a larger number of increase in transactions at lower volumes, but with an SSA, higher volumes with slightly lower transactions. So this is roughly the revenue picture, which is a good view of just how InsurTech have been able to improve their market shares, increase the number of customers, and increase the revenue. On the cost side, Pascal, if you move to the next slide, we'll see that there are a number of drivers which have impacted just on the cost of operations. So we see the number of insurance lapses increasing by 7% year on year, which is quite high in SSA relative to the overall number. So the overall number we see being 0 or slightly negative, whereas in SSA, the increases in insurance policy lapses of 7%. On claims, we also see a slightly higher increase in claims in Sub-Saharan Africa than we do in the overall. And then contractual disputes, and this is something which was mentioned earlier, just the concern about consumer protection regulation, and really within this environment, how do we manage that? We see here that there is a 5% increase in contractual disputes between last year and now. So the percentage, it was calculated here by asking individuals, what is the percentage increase between this metric in the first 6 months of the previous year and this year? So that's just where the percentage comes from. It's the average across the respondents. Okay, Pascal, you can move over to the next slide. Then another thing which we really wanted to measure is how have InsurTech responded to the pandemic in terms of changing their products and services. So we know there's a lot of impacts which the customers of InsurTech products have gone through. How have InsurTech responded to the changes in the operating or business environment, as well as the changing context to their consumers. What we found is that quite a large number of InsurTech players either deployed or were in the process of deploying some type of payment easement and payment holidays with fee and commission waivers or fee and commission reductions being slightly less popular but still prevalent in the sample. In terms of reducing the premiums charged for certain cover, we had just over 30% of respondents indicating that they were in some way reducing the premium for the existing products which they have in store. In terms of launching new products, Pascal, if you move us over to the next slide. Here we can see that there was quite a number of InsurTechs which have discontinued the sales of products and services. So more than 50% of SSA respondents indicating that they either already have or in the process of discontinuing a product due to the impact of COVID-19. But similarly, more than 50% saying they're also looking at enhancing the benefits and providing some type of additional cover in terms of feature. In terms of the onboarding environment, obviously being slightly different during COVID-19 due to lockdown measures, we're also seeing quite a number of firms, more than 40%, saying that they're making some changes to qualification criteria and onboarding criteria. So these are changes in features. Before we saw pricing, this is features. Next, we'll look at some of the new products which have been launched by insurance companies. Pascal, if you can just move us to the next slide. So here we asked firms what new products or services they've launched as a result of COVID-19. Around 40% said that they were introducing some form of insurance related to COVID-19. So as a direct response, thinking around what types of cover, given the risks that have changed with their customers, what type of products can they launch given the new context. That's around 40%. And then there were a number of other features which were added. Connor from the IIS spoke earlier about the challenges in fraud and cybersecurity. We're seeing InsurTech responding to that by bringing in new features or launching new products to deal with that. And then a number have added some type of value-added services. So around their insurance offering, not necessarily a risk product, but another type of product to benefit their customers during this time. But the most interesting here is 40% looking at launching or having launched some type of insurance specifically related to COVID-19. On the next slide, Pascal. We heard earlier specifically around the role that InsurTech can play in extending reach of the insurance sector to individuals who don't have insurance or particularly vulnerable groups. Here we asked InsurTech whether or not COVID-19 has negatively impacted or positively impacted their ability to serve specific customer groups. The two areas that were particularly negatively impacted were rural population and micro, small and medium enterprises. So we see that around 31% of firms said that due to COVID-19, their ability to reach rural population and MSMEs were to viably serve them or service them has been impacted. We've also seen some gains. The biggest gains in terms of firms saying that COVID-19 has presented new opportunities for them to serve specific customer groups was for women specifically at 19%, but there also we saw 25% of firms indicating that COVID-19 has negatively impacted their ability to serve that group. So very important to understand what some of these underlying trends are, which are creating increased challenges or some of the accelerated effects of COVID-19 in assisting in improving Fintech's ability to serve these customer groups and mitigating that through. If we can just go to the next slide. So I think this part of the survey, I think, is particularly interesting from a regulatory perspective, and this relates to the relationship between regulators and InsurTech. So we asked, we say Fintechs here, but this was the question, the broader, for InsurTech, we asked, what regulatory responses or regulatory innovation would support your InsurTech business in light of COVID-19? So particularly due to COVID-19, what are you looking towards the regulators or supervisors in your community or in your jurisdiction in order to support the work that you're doing or help you navigate the complexities of COVID-19? You can just go to the next slide. I've broken this down roughly into three areas of responses. So the areas that had the largest responses, and Hannah spoke about this as part of the introduction, was just the product approval processes. So here we see nearly 80% of firms asking for some type of streamlined product and service approval process being needed either urgently or in the longer term to help them bring new products online. We also see a need for exemption to operate new financial services products, faster authorizations, and the extension of interim permissions. But the product approval process was really the one that stuck out in the product approval category of regulatory responses as something which was urgently needed or needed in the long term. Interestingly, 6% of respondents said they already benefit from some type of regulatory response which extends interim permissions or provide some type of exemption to operate a new financial service or product. We can move to the next slide. Here we look at remote onboarding, and what we find is that there's a large demand for regulatory support with eKYC, support for remote onboarding, and simplified customer due diligence. For various reasons, we see this not only in Sub-Saharan Africa, but in many parts of the world where this is something which Fintechs have looked to regulators to support that and help them manage through the complexities of COVID-19 and doing these tasks. These obviously existed before COVID-19 as well, but the question specifically related and asked in response to COVID-19 COVID-19, which measures would be of support. Interestingly here, a number of InsurTech firms indicated already that they benefited from some type of regulatory support for eKYC and remote onboarding. So those examples and how they have benefited those firms could be interesting to share between the regulators in this conversation, just as identifying ways in which we can support InsurTech, particularly when it comes to the customer due diligence or onboarding. In the next slide, we look at the regulatory innovation initiatives. And here, this was the third category of demand. And we see that working with an innovation office, just over 45% of firms indicated that they would be interested in doing so. And admission of the firm into some type of regulatory sandbox, once again, we see just over 40%. Around 12% already said that they work with an innovation office, whereas none of the respondents in our group were currently in a regulatory sandbox. But once again, just good to see the demand here from the InsurTech community of working in innovation space jointly with regulators in their jurisdictions. In the next slide, or in the next question, we wanted to understand some of the operational impacts of COVID-19 on the InsurTech sector. So we wanted to understand what really were some of the changes in their daily operational experience. And I haven't listed all of the ones here, but the ones I have listed relate to platform downtime. So despite COVID-19, InsurTech platforms in Sub-Saharan Africa have managed to reduce their platform downtime by almost 5%, which is larger than the overall response. So overall, InsurTech's indicated from other regions or globally, indicated about the same platform downtime, whereas InsurTechs in Sub-Saharan Africa stated a reduced platform downtime. And I think this is particularly interesting because when you look at the environments in which InsurTechs operate, they report a 23% increase in agent or partner downtime, because InsurTechs operate in parts of the insurance value chain and often rely on different telecommunications or other partners in the value chain. The fact that they're able to have such low levels of downtime despite their partner downtime increasing by 23%, I think is a significant feat for InsurTechs operating in the region, and also just shows some of the complexities in which they operate in. Here we see onboarding costs have also increased more in SSA than globally, about 8% in onboarding expenditure. Foreign currency exposure risks have also increased more within Sub-Saharan Africa than the global average. And cybersecurity risks also seeing large increases here of 20% year on year compared to 12% globally. So that brings me to the end of this presentation. The final report, as was mentioned earlier, will be published early in next month with a launch event that we'll do jointly with the World Economic Forum and the World Bank, who are co-partners on this towards the end of next month. And then I'd also like to thank the FCDO for their contribution to the study and work as well. Thank you.
Thanks, Herman. And once again, thanks for sharing this data ahead of the publication. It's really much appreciated. And more generally, it's good to see that InsurTechs are proving resilient during this crisis, because I know initially there were concerns.
Yes, I think overall this is a positive picture. Not all fintech verticals had the same, or the aggregate response of the different forces weren't the same for all fintech sectors. So digital lending and others had a much tougher time weathering the COVID-19 storm. But I think what we see on the InsurTech side is optimistic. There are some challenges in just navigating some regulatory hurdles and some of the operational challenges. So I wouldn't say that it is only a rosy picture, but what we do see is improved market share, ability to attract more clients, and really the start of the response to some of the challenges faced by COVID-19.
Thanks, Herman. And I think actually that's really set the tone for the rest of the dialogue today, both the challenges that InsurTechs will be facing and also the regulatory challenges as well for our afternoon session. Our next session is a fireside chat with innovators. So this session will be moderated by Tom Herbstein. Tom is the insurance property specialist at the UK's DIT, where he focuses on financial services technology, disaster risk financing, and climate risk resilience. He is also one of the co-leads for the Tech for Growth programme, which Lami mentioned at the beginning of this dialogue. And I think a lot of you in the audience will be familiar with. Tom, welcome, and over to you.
Thank you, Pascal. And just want to make sure that both Ace and Thomas are in the room. If you could wave or make yourself known.
I'm in the room. This is Ace.
Hi, Ace. And Thomas?
Hi, Tom. Pleasure to meet you again.
Hi, Thomas. Good. Right. Technology is bringing us all together. So welcome, everybody. As Pascal said, my name's Tom Herbstein. I'm the Prosperity Insurance Specialist at the Department for International Trade. I co-lead the Tech for Growth program, which has two primary aims. The first is to work across Africa and help grow the domestic InsurTech and Fintech sectors. And second, it's about promoting the UK as a partner with economies across Africa to help grow the sector and create opportunities and mutual opportunities for both economies. So first of all, a big thank you to A2II for putting this event together. I think it's come as no surprise to anyone that it's been a much longer, more complicated event than was initially anticipated back in January and February when we first thought about it. So great effort from them in pulling it together. We've got limited time, so I will ask if anyone does have questions to please put them in the chat, and we will attempt to try and address them either during or after. As we've heard already this afternoon, Africa remains chronically underserved for financial services. Over 60% of Sub-Saharan Africans remain unbanked, and insurance penetration is still at around 3%, which is significantly less than the 6 or 7% global GDP of world average. However, there are a lot of green shoots. We've seen smartphone penetration increase to over 60%, which marks an increase from just 2% back in 2010. Which has really opened up and ushered in a whole host of new opportunities, such as mobile money, that has now reached 43% of the sub-Saharan population at the end of last year. However, insurance specifically faces many barriers to entry. In particular, the challenge of how do you convert a business model that in more developed markets is typically structured around high premiums and low volumes, to the low premium and high volume model that's required in most emerging economies, particularly across African markets. Interestingly, 2019 EY Ernst & Young survey found that the two drivers that really are driving opportunities across the African insurance sector, besides GDP growth, is product innovation and regulatory changes. And so it's really apt that we're able to convene today and have a conversation around regulating innovation across the insurance industry. And how better to do that than to hear direct from the horse's mouth, so to speak, and to be joined by two folks that are really helping to lead the next generation of insurance innovation across Africa and to contribute to the penetration that's required. So I'm delighted to welcome Ace Majija, Chief Executive for Individual Life and Retail, Corporate and Group Strategy at Prudential Life. He's based in the Ivory Coast and covers most of the Francophone region, but has had experience pretty much on every continent that Prudential's been active in. And Thomas Njeru, co-founder, Chief Actuary and Chief Finance Officer of Pula, who's based in Nairobi, Kenya. Welcome to you both.
Thanks, Tom.
Thanks.
I think we'll start off. I'll invite you both to give a 1 minute elevator pitch, really to just describe what you're working on right now. Ace, do you want to go first?
Okay, so we've recently entered the Francophone business, Ivory Coast, Cameroon, and Togo. So I have just moved to represent Prudential, looking after the interests of Prudential, obviously, and to grow the market. Our mission is to be in the top 3 in all the markets that we operate in, and that's one of the challenges that I have. I haven't moved to those countries, but then the company that we acquired has been pretty much agency driven. But now we're obviously looking for alternative means of distribution, including covering different market segments, as well as to drive financial inclusion.
Fantastic, thank you. And Thomas?
Hi, everyone. As Thomas said, I'm Thomas, co-founder and co-CEO of Pula. At Pula, we develop and distribute agriculture insurance solutions to smallholder farmers in Africa. Our model, basically, we are a service provider to insurance and reinsurance companies, and we design and execute insurance solutions targeting small farmers. Currently, 13 countries in Africa and Asia, having reached 3.5 million farmers over the last 4.5 years since starting of Pula. And why agriculture insurance? We believe that the smallholder farmer is one of the most underinsured segments in Africa, yet it contributes to the biggest proportion of Africa's food production. And without insurance, they end up investing suboptimally on their farms. And as such, to solve the problem of food security and make the farmers more resilient, then they need to find a way to get the farmer insured. It's a pleasure and what to a fruitful conversation with the panel. Thank you.
Fantastic. Thanks, Thomas. So turning to you, Ace, you know, Prudential's been around for over 170 years now. And in many respects, it offers, or historically has offered, quite traditional life and health insurance. However, increasingly, you're turning to technology to help extend your service across Africa. Why are you doing this? What do you see that technology can help you deliver? And is this being driven by shifts in Prudential's interest in markets, or being driven by your client base?
Thanks, Thomas, for the question. So I see the value add for technology in 3 elements. So one is for customer engagement, and the other one is for Prudential as an opportunity for Prudential, but also for the employees. So when you look at customer engagement, first of all, to improve our levels of service for sales, servicing and claims, and as well as to drive self-service, you need technology. One of the things that we've been able to achieve is straight-through underwriting and also processing claims with a quicker turnaround time, as well as to develop products using technology, obviously. So customers are more demanding and demanding things alongside technology advancements and adoption in other sectors, and this is also helping driving the change. And you realize that for you to reach the customers, you need to be at the convenience of the customer. And we're moving away from having to have face-to-face interactions, and people prefer to do self-service, but also to enable us to do things technologically. So, and having been through the pandemic recently, we've had to adapt and to move quicker. Where we used to do traditional underwriting or traditional sales process, now people have to go online and do an underwriting process, apply for the product, and then we issue the policy with a quicker turnaround time. So I think it's either you adapt or you fail. It's an issue of having video machines before, and now there's Netflix. And for us as Prudential, it gave us an opportunity to reach out to a wider audience using different platforms. We've got a new app called Pulse, which is like an ecosystem that we've developed, which helps connect our agents, helps connect our customers, helps connect the company. So the agent is able to do a proper sales process using digital platforms, do the whole underwriting, and also do a needs analysis on the customer. The customer is able to access their portfolio, see if their needs are being met adequately, As for Prudential, we get to understand our portfolio and we get to understand the exposure that we are in, and then we also help develop new products. So I think there's nothing we can do without technology. Even more so now, the cost of servicing customers is very important. And more you find that if you want to drive financial inclusion, you're selling small ticket sizes and you can't afford to have a face-to-face action because the cost of that is quite high. So there we use the use of telcos, for instance, where we would sell to your lower income group direct without having to deal with them face-to-face. USSD is one, or for them getting into an online platform and buying a product that's fixable. Bank customers are the same. They do online banking now, and few people are going to visit bank branches. So how do we then adapt the use of the banking platforms or the use of the banking apps to also access customers and for our customers to be able to buy our products? So I think it's a whole value proposition for us. And then obviously, lastly, for employees, it helps them develop their skill sets, but also to work on new and exciting projects. So I think it's a whole value chain where we get to use technology, and it's not just one focus, but more importantly, to the customers.
Yeah, I mean, that's really interesting to hear how technology is now sort of part of the DNA almost of Prudential, and it's being driven, the demand for it is being driven pretty much at every point of the organization.
Actually, sorry, I forgot something. The other important aspect to show that technology is very important to us, we've hired a chief digital officer who used to be in the Silicon Valley, and he's helping driving the digital transformation strategy for the company. So it's one of the big things that we're focusing on going forward.
Okay. Thomas, it's a little different for Pula, isn't it? Because, you know, I've spoken with you previously, and you don't see Pula necessarily as an insurance company. How do you fit into the insurance ecosystem? And what tools do you use to deliver value for your clients?
Okay, so we see ourselves as a service provider to insurers via our product platforms or solutions. And as such, we end up working very closely with insurance and insurance to assist them with the end-to-end execution of the product. Now, if you look at, for instance, we do distribution by building business cases to agri-businesses and governments to embed insurance to their products. And as such, in the traditional sort of context, you will say we are a broker or an agent. At the same time, we also do product development, pricing, using our proprietary data that you've collected and risk algorithms. So again, in the traditional insurance context, you would call it a consultant or an actuary for that matter. With that, we do insurance placement and negotiations. So again, in the traditional context, you would call us an insurance broker. And beyond that, we also do determining payouts, either using remote sensing technology or field-based harvest determine the achieved yields of the farmers. Know whether there's a payout or there's no payout. And again, if you look at the traditional definition of someone who does that in the traditional insurer, is what you call either loss assessor or claim settlement agent. So basically, we cut across different service providers in the insurance value chain using the different tools or mechanisms that we've developed. So how we see ourselves is we're basically an executor of agriculture insurance solution.
Yeah, which is it's really interesting because it ties into this sort of emerging idea around interoperability. And Ace, I'll come back to the payment interoperability with you in a moment. But this concept of cross-sector interoperability, working across different sectors, and here you've sort of described, you know, the work that you do at different levels of the insurance sector, but also your partnerships with agri-tech businesses and so forth. Thomas, with that in mind, what are some of the main regulatory challenges that Pula faces through this business model?
Thanks. That's a very good question. I think one of the things is the question is, where do you fit us? Are we a broker? Are we an agent? or are we an insurance broker? Are we a claim or loss settlement agent? So one of the challenges is, okay, so what is, because regulators across Africa when it comes to insurance, they're very descriptive in terms of the remuneration models for the different different service providers. So the question becomes, what's our remuneration model? You don't have, how do you actually regulate Pula? Will you regulate Pula as an agent? We even had a case in one of the countries like Kenya where we have had to get 4 licenses to actually operate. In some countries, you go and of course we always have to visit the regulator and explain to them what we do. The regulator interprets things differently. Some of them will say, actually, you don't need any license. You're a service team, and that's it. Continue operating. We like what you guys are doing. So that those different treatments across different regulators, and mostly because you don't have any existing what you will call a standard approach or sort of best of class approach in terms of how we treat an InsurTech or a business model as ours, then it creates an element of confusion to our stakeholders. So because investors will ask where your license is, and it's a very long story. Or the taxman, when they're coming to evaluate how to tax us, they don't have any existing tax codes of how exactly where we fit. So those are some of the challenges that we see. But I would say we've received a lot of support given the impact and the financial inclusion angle that the business has at the core of its mission.
Great. So it's that sort of lack of consistency across different regulatory regimes that often causes a challenge. Ace, Prudential's trying to make use of mobile money a lot to distribute your insurance products. What are you finding here in terms of your experience in working across sort of overlapping regulatory frameworks, and thinking particularly here sort of insurance, banking and communications regulation?
So you remember one of the things I said was convenience to the customer is very key. So in terms of our premium collection, we've opened different portals. So there's the mobile money, then there's airtime, there's direct debit, and your conventional ways of collecting money. But what you find more importantly, especially if you get into the financial inclusion space, some of these people are unbanked. So then how do you then tap into them? And then what our preference, obviously for me, is more airtime deduction. Where we've got a partnership in Ghana, for instance, with Bima as well as a telco, so Vodafone, Airtel, and Tigo, where some of our customers are paying like $1 a month for their insurance cover. And but how you take that money, you take it on a daily basis from their airtime. So 10% of that over 10 days, then you're covered for the funds. But more and more now, telcos are pushing us to move towards mobile money in terms of premium collection. So that is for the financial inclusion guys, but also for some of the guys who are on our individual clients, who are direct clients to us, then they also are able to pay via mobile money. But the problem with mobile money is you need to remember to pay insurance. It's not a direct debit. So unless someone remembers to say, I will transfer the money into this insurance account, then you miss out. And the cost of having to remind the customers and calling them to deduct that small premium is very costly to the insurance company. But now we are seeing the telcos flexible to allow a direct debit functionality onto the mobile money. But the additional issue with mobile money is a lot of people have mobile money accounts, but few are transacting to those accounts. So unless those mobile wallets have loaded with cash, then they are not useful to us. And so in the places like East Africa, for instance, in Kenya, the M-Pesa model has worked perfectly. You kind of don't even need a debit card to move around. You pay for everything that you do using M-Pesa, but it's not as successful in the rest of the continent.
Just a reflecting on a question that's come in on the chat, sort of thinking here about telcos and the contribution to financial literacy. Thinking about sort of remote onboarding, which Herman mentioned as one of the big sort of needs cited in their survey. How can insurance providers contribute to increasing financial literacy through these new methods?
So it's two-pronged, right? First of all, we do it from a CSR point of view, where we work with a lot of schools as well as the Plan International and Junior Achievers associations, where we come up with curriculums on financial literacy that is tailored for high school students. And we use our staff as volunteers to deliver that curriculum. That's one. Then on the financial inclusion side, especially the low income side, we do a lot of activations at centers where the guys are residing, because you need to teach them why insurance is important. First of all, as much as we have so many funerals in Africa, people find it still taboo to prepare for your own death. So you need to educate them about how you're leaving a legacy for those behind you, especially if you're responsible for someone. And you are the sole provider. What happens when you're not able to provide? So then that's how they start to see it. So there's a lot of education and dialogue and interacting with people. And what we've done recently as well, we started doing a lot of webinars where we talk about financial planning, we talk about all sorts of things that are finance literacy related. Yes, we can do much more. And what we have done, especially in Asia, we also do like a child's program on Cartoon Network, which we call Cha-Ching. It's about how you use your money, but it's tailored at kids so that as they grow up, they understand financial literacy and they know how to handle money.
Right. And Thomas, what about you? I mean, are you seeing any alignment between regulators and insurance around financial inclusion? I mean, particularly you're at the sort of bleeding edge in terms of the communities you're working with on this.
Yeah, absolutely. If you think about it, penetration of insurance in Africa is low, especially Sub-Saharan Africa. And everyone accepts that actually the opportunity is actually in reaching the uninsured. That's where the biggest opportunity lies. And looking at on the regulator side, they have an interest because the mandate is actually, in most of these countries, their mandate is to increase the penetration of insurance. That becomes, it's actually one of them they're given. The insurance side, from a commercial point of view, they see that it's a huge opportunity. So there is alignment in terms of accepting that there's an opportunity, and this is something that needs to be done. We've seen increasingly investments, both from the insurance as well as the regulators, towards educating the masses in terms of the need for insurance. But also looking into ways how you can reach them. I think back to what I was saying earlier on, we've seen a lot of support from regulators as well as insurers to just enter into partnerships with people who are looking to increase financial inclusion and a lot of flexibility. You don't have any regulation that actually talking to, okay, so how do you define a business model such as ours? So that flexibility is actually what is enabling more and more business models coming up. We've also seen some countries like Kenya, we have they're just launching a regulatory sandbox. Kenya also just is in the process of actually signing off a micro insurance license, whereby it has lower capital requirement. In that case, then it allows for more entrants to actually solve the problem of financial inclusion. So I think I actually do see lots of alignment, a lot of activities that are going towards increasing the reach of insurance to the mass market.
Great. So it's a lot of green shoots that are emerging across the continent. This question's to both of you, I think, and just sort of building on that. I'll start with you, Ace. Given that there's a lot of regulators listening in today, what would your number one ask be as an insurer trying to grow the African insurance market? What's the one thing that regulators could do to help facilitate that?
Yeah, so I think that the big issue is so first of all, the penetration levels for insurance in the continent, they're very low, mostly less than 2% compared to GDP. But then you're finding that regulators are adapting and adopting a lot of regulations and policies that are Western focused with the infrastructures that we don't have in the African context. So it's all good and well to copy, but I think we need to be able to customize and take into account our local context. But then what I've found to be reasonable in some regulators that I have to deal with, they are always welcoming new innovative ways of doing things. And especially because we're multinational, they tend to look at us to drive the pace. And they are open to lobbying, they are open to you guys setting the scene, and then you ask for permission after. But what tends to happen, if you go ask for permission before you do something, you'll get a no. But try it, and then once they see that it's working, then they tend to follow on board. So I think it's good and well that we're trying to get to the first world type of regulation, but let's really adapt and accept that we are not at the same level as those developed markets. Let's look at our local context and do what needs to happen.
And presumably Prudential is in a position to work with regulators to help shape what will work, what won't in the context of those markets.
In most countries, so one of the things with our governance framework is we use the prudential policies and regulation unless the local regulations are of a higher standard. But you find that because we are listed in the UK, so the requirements are much higher. So we'd have to be more flexible in how we adapt but still be compliant. So one of the things we were challenged with when we first moved into Ghana was the issue around AML and CDD. And at the time, there were no street addresses. And you couldn't really, and some people had no IDs. But then it says you cannot, in the same regulation says you cannot exclude someone on the basis of identity. So you had to do a counteract balance between the two, that do you insure this person or do you adapt or you comply 100% but be commercial and viable. So there's a bit of gambling that you need to do and a bit of flexibility. In some instances, people had to draw their address to like the direction to their home addresses because there was no physical address.
Yeah.
So so they tend to look to us, and I think we set the pace because we are pushed by the group that we need to do this and it's what is required.
Mm-hmm. And Thomas, I guess the same question to you in the couple of minutes we have left. You know, what ask do you have of those listening in on this call?
I think I will augur what Ace was saying around actually customizing the regulatory environment to local context, but then probably go further down to also depending on the type of and class of insurance. I'll just give you an example to see what I mean. So agriculture tends to be very systemic in the sense that if you look at, for instance, a country like Kenya, it probably has 5 or 6 agroecological zones, major agroecological zones. Insurance predominantly operates on the basis of diversification. So you cannot in any way underwrite as an insurance company, a local insurance company in Kenya. You cannot underwrite you can't build an agricultural portfolio in Kenya and claim that it's diversified, because it's akin to insuring only 5 cars or 5 buildings and claim it's diversified, because when you have one claim, it totally throws your portfolio off mark. So what does that mean? It means that it's very difficult for a local insurance company to build a portfolio that is diversified and stable. So I find local insurance companies struggling to actually build a business case for going into agriculture insurance because of that. Because they get in and just one loss in 1 year, it throws everything, their pricing models off because they don't have the diversification. So how such a thing probably be tackled? I think we need to start allowing if you look to most insurance acts in Africa, they talk about that insurance has to be underwritten locally. That's number one. So then you don't have a lot of risk sharing across within the continent, which means an insurance company cannot diversify the portfolio. So the insurance companies, from agriculture risk perspective, the regulation need to adapt to allow sharing of risks within the across the insurers in the different continents. So an insurance company in Kenya should be able to actually underwrite or insure a risk in Ghana and probably Zambia, and that's the only way it can actually build diversification. Otherwise, it won't work.
Understood. Well, I think those messages are loud and clear. We have unfortunately run out of time. Half an hour always seems like a long time when you start, but it's amazing how quickly it goes. You've set the internet on fire, gents. So I would ask if you could just pop into the chat afterwards and maybe just engage with some of the comments and questions that people have been adding during the past half hour. But just to say a huge thank you to you both. I continue to be inspired by the work that you're doing and look forward to continue working with you. Thank you. And Pascal, over to you.
Thanks.
Thanks, Tom.
Thanks, Tom, and thanks to Ace and Thomas for these really interesting inputs. Certainly a lot of food for thought for our supervisors in the room and also for our next panel. As I mentioned earlier, this next panel is slightly shifting in focus as we discuss the supervisory perspectives and challenges involved in regulating innovation. Moderating our next panel discussion is Hannah Grant, head of the A2I Secretariat. Hannah is head of the A2I and oversees the day-to-day running of the initiative. Prior to working at the A2I, she worked in London and Brussels, where she was head of international affairs at Insurance Europe, and in parallel ran the Secretariat for the Global Federation of Insurance Associations. Thanks, Hannah, and to our panelists as well. Hannah, please go ahead.
Thank you, Pascal, and also, Tom, I'd say congratulations for a great panel. I really enjoyed the discussion, and I think there's quite a few things we can actually pick up on now in this panel. So I'd first like to invite both Jeremy and Kofi to come forward. If you could both just say hello and turn your cameras on, that would be great.
Hi, Hannah.
Hi, Jeremy. And Kofi, we got you as well. Perfect. So it's good. Great. So it's touched on in my welcoming remarks, and I think also every speaker so far, having an enabling environment is essential in order for the opportunities presented by InsurTech and technological innovation in general to be fully realized. I'm therefore delighted to have an excellent panel where we can now showcase and also discuss the different approaches that supervisors have been taking to support responsible innovation. So on my panel, probably familiar faces to you all, but I have Kofi Andor, who is the Deputy Commissioner of Insurance at the National Insurance Commission of Ghana. Kofi has been involved in many projects to develop the insurance market and improve access to insurance in Ghana. He was also leading actually a multi-stakeholder team in the first cohort of the A2I's Inclusive Insurance Innovation Lab. So welcome, Kofi.
Thank you.
I also have Jeremy Gray from Century. Jeremy leads the resilience team at Century, and actually in this context has conducted research and I think worked directly with insurance supervisory authorities firsthand in supporting them in enabling sort of innovation in their marketplaces. So two real experts on the topic. So yeah, welcome Jeremy as well. Welcome to you both.
Thanks, Hannah.
So we're going to start off actually my first question. And actually maybe before I sort of start my questions, also to say I really would like to use the chat today. So if you have questions, please put them in the chat and we'll try and address them as the discussion goes on. So yeah, my first question, I mean, really looking at sort of different supervisory approaches that have been taken to supporting innovation. And maybe Kofi, if I turn first to you and we look at the experiences in Ghana. So what has sort of NAIC been doing to support innovation in the Ghanaian market?
Thank you, Hannah. The NIC is open to innovation and open to it, not just open. We actually encourage innovation. What we've been doing is to support insurance companies and entities that come up with innovative ideas that could help to improve the penetration and the development of the market. Talking about being open and encouraging innovation, so we mainly use principle-based regulations, which gives us the flexibility to be able to accommodate innovations. The thing about regulation, when it is rule-based, it talks about what is supposed to be done, how it must be done. And so when somebody devises a better way of doing it, it becomes difficult for the regulation to accommodate it. But when you have a principle-based supervision, it talks about what is supposed to be achieved without necessarily defining how. That way, if somebody finds another way of doing it, still accommodated. And so as much as possible, we try to be principle-based in our regulations and to encouraging and being open to innovation doesn't mean that we are oblivious of the risks that the innovation brings to the table. And so we focus on the risks as well. When a new thing comes up, we look at it and see the potential benefits that it can bring, and then we what can go wrong with this? What will happen if this happens? And how do we look at it? For example, I was listening to the gentleman from Pula and talking about the multiplicity of services that they offer. Is there the risk of conflict of interest at some point? And if it does happen, how are we going to mitigate it? So we also focus on the risks as we look at innovation and ask what kind of these innovations bring to the table and what are we going to mitigate it. So yes, that is short, open, but we also keep our eyes on the risks.
Thank you, Kofi. And yeah, it's good, hearing from you about the principles-based approach taken in Ghana. And I think it's certainly known that a lot of innovation, particularly in the mobile space, has happened in Ghana. And I think a lot of that comes down to you and your supervisory authority for being open and allowing these sort of innovations into the market. Jeremy, turning to you, and actually a similar question. Have you seen similar approaches to what Kofi has been describing there taken by other supervisory authorities? Where you've been doing your research? Or what sort of other approaches have you seen supervisors take to try and encourage innovation, but at the same time, obviously, look out for the consumer? I think you're on mute, Jeremy. You need to just unmute. That's it.
Oh, okay, great. Sorry about that. Thanks, Anna. Yeah, so I think it is a really important question. And I think Kofi gave a good example of how Ghana looks at this question. I think it might be useful to take a quick step back and actually understand kind of how mandates of insurance regulators have evolved over the last few years. So traditionally, regulators are really focused on prudential compliance and issues around prudential stability. And then increasingly, consumer protection has been very much front of mind. And I think for insurance regulators, it's been those two mandates that have dominated what they try to achieve. But in the last probably 5 to 10 years, I think increasingly we've started to see, in some cases explicitly and in some cases implicitly, a mandate to encourage market development, or in this case, like we're discussing, encouraging innovation. So in some countries, in Uganda and Kenya, for example, it's actually embedded within the legislation that the regulator has a mandate to encourage market development. In other countries, like in Ghana, it's not necessarily explicitly in the legislation, but it is very much financial inclusion or market development is very much an explicit objective set by the board or set by the ministry. And so what that means is that regulators are required to maintain this balance between encouraging innovation and the risks that come about from it, as Kofi mentioned, or encouraging innovation and then also managing the risks that come about. And that's a tricky balancing act. And on top of it, it's quite a new thing that regulators have had to deal with. It's only been around for the last 5 to 10 years that regulators have really been explicitly asked to think about this. And I think that the result is that when you look at the approaches that have been taken, it is still very much an evolving field. I think that that's why this is a discussion that's gathering such a lot of traction, apart from the fact that it's obviously really important and important that we drive innovation. And I think one of the aspects that probably everyone on the call has heard of is regulatory sandboxes, which is an aspect that's or an approach that's really gained a lot of traction and a lot of hype in this space, because the underlying principle of a sandbox is that it creates a safe space for innovators to innovate, but for regulators to enable them to pilot their products in a safe space. So to ensure that there is, effective controls in place whilst that product is being tested. And I think that underlying principle is really compelling, and one of the reasons it's gained such a lot of traction. But I think that what the hype cycle of sandboxes sort of doesn't fully recognize is that it's not necessarily, it's not always the best fit for every single context, and that's really the question that you're getting at, which is what is the best fit for purpose response for each individual context, and what is the best contextual response. So on the slide that I think Pascal's just shown is an example that CCAF has just published. They've just published a practical guide to sandboxes, which I would really recommend anyone checking out. And they've developed this decision tree, which takes you through a series of questions or decisions for regulators to consider whether a sandbox is appropriate for their given context. And the key point here is that a sandbox does not work for every context and for every regulator. Regulators should really consider what is the objective of the problem they're trying to solve, what is the challenge to innovation within their market currently, so what are the challenges actually being faced by innovators, and their own current internal capacity, what are their existing processes and their existing approaches, and then consider what are the best set of tools or approaches they can apply that would best enable them to encourage innovation responsibly in their context, given their capacity and their other constraints. And, I think in many African countries, regulators are bound with limited capacity, and sandboxes may not be the most effective mechanism for them to encourage innovation. But the principle underlying the sandbox, that principle of enabling innovation to operate in a safe space with risks protected, is hugely applicable. And I think Kofi made this point really well right at the beginning of his response, that taking that principles-based approach enables you to achieve many of those same outcomes without having to apply a formal mechanism like a sandbox. Being a test and learn approach that enables you to allow a pilot of a product to operate, for example, under a letter of no objection, which is how mobile insurance first operated in Ghana, with conditions applied, and to monitor that closely, enables many regulators to actually achieve many of the same objectives as the sandbox might, but that in a way that may be more appropriate for their context. So, yeah, I think that focuses a lot on sandboxes because it's something that is so topical at the moment. But the idea being that I think crafting a context-specific response is probably, it should really be consistent in every case.
Sure. Maybe I just do a quick follow-up question then from that to Kofi. About regulatory sandboxes. This also came up actually in the CCAF presentation at the beginning, and we saw that quite a few InsurTechs had said having a sandbox or having a Fintech sort of office you could turn to in a supervisory authority might encourage innovation. Does Ghana have a regulatory sandbox, or are you planning to have one in Ghana?
Okay. We currently do not have one, but we are working on one. We have a new insurance bill in the open, and we have provisions in it to be able to create a formal regulatory sandbox to properly shepherd and pilot innovation. So yes, there's one in the pipeline, but until it comes, we still have room to still accommodate innovation.
Okay, no, interesting. And maybe linked to that, I might ask a question actually from the chat, and I think this comes from, is it John from Uganda? And he's saying that a lot of regulators in Africa do have the mandate to drive insurance market development, but they have the challenge that they have insurers running on traditional insurance models who are very risk-averse and not so innovative. So maybe, Joan, if I put the question to you first, but what have you seen supervisors do to try and, let's say, encourage sort of entities like this to innovate, or, to encourage innovation aside from this within the market?
Yeah, absolutely. And I think, a sandbox can be a useful mechanism. I'm not undermining that at all. But I think that point about the innovation office or innovation support or innovation hub is equally or often even more important than the formal sandbox function. I think what we've seen is that one of the major challenges that innovators face is actually entry to the market. So helping them navigate that regulatory pathway into the market is something that's really powerful. So providing advice and support to innovators to enter the market, I think can be really important and really impactful. I think for existing insurers that are running on like you say, traditional type systems, I think there's an aspect of signaling to the market around, regulators do have a powerful role to play. They can convene the market, they can signal direction, nudge players into certain directions in terms of the communication that they put out. So I think communicating best practice, communicating demonstration cases from other countries can be powerful. I think also convening. So convening workshops where you get both innovators or tech players in the same physical, I guess not at the moment, but in the same physical space as insurers can actually be really powerful in that it enables people from quite different backgrounds to speak to each other and to share ideas. So exposing insurers to those different ideas and different ways of thinking towards addressing a given problem, I think can be one way in which regulators can play a role there.
Sure. And Kofi, do you want to add anything from your Ghanaian perspective on this? Because you've already seen quite a bit of innovation in your marketplace, and the regulatory sandbox, is probably in the pipeline, you said, in this new bill, but it's not there currently. So how have you managed to encourage these mobile operators to get involved in the insurance business model and otherwise foster sort of innovation in Ghana?
Great. So we have an approach. Usually people approach us with their innovative ideas, and we look at how we can accommodate them under the regulations that we have, and we do so. We don't have regulations for every bit of innovation that might come up, but what we do ask is that can this be accommodated under the regulations? What would it do to the market? What kind of improvements would it bring to the market? What kind of risks does it bring? How can we mitigate those risks so that we can allow them to operate? Are there any restrictions we can have from the beginning to make sure that if there are any risks, we keep a hand on it in the short time or in the interim until it can be upscaled? So we're sort of open. We engage a lot in consultation discussions with these people who want to innovate, actively seeking how truly we can help them to implement something that will help the market. And so we are not eager to look through the law to find a clause that says that shall not, and just close the door. But we look at how we can open a window for them to come in, even when there isn't a clear door.
Thank you, Kofi. And this now moves me actually on to looking a bit more at COVID-19 and the impact that this has had on innovation. So maybe, Kofi, turning sort of first to you. So have you seen sort of new technological innovations in Ghana as a result of COVID-19? And actually here, it'd be interesting to hear both about what you've seen maybe in the market, but also maybe about developments within your supervisory authority and how you've maybe used or changed your approach on technology as a result of COVID-19.
That's right. Thank you. Yes, we have observed a lot of technological innovations ever since the outbreak of COVID. Until the outbreak of COVID, some technology was being developed because this digitization thing was on before COVID came. I think COVID has just come to catalyze it, has come to make it a bit more urgent, and so the developments are happening, I think, faster than they would have happened without COVID. We see a lot of digital distribution channels developing now, and we see a lot more companies now developing apps on which they are able to get people to apply for their product and actually buy them and pay for them. A lot of companies have built web-based portals and are educating the public on how they can use these web-based portals to access their services. And since it is not everybody that uses a smartphone, a lot of the companies also have USSD shortcodes, which even without a smartphone, people can still use to access these services, and the education is also ongoing. I must say that the outbreak of COVID has also fastened or increased the use of mobile money, and so that has also enabled the technological distribution channels, because once you use that, it means that you have to make electronic payment, and mobile money has come in to close that gap, and so it is just working very well in tandem. Another interesting thing that has happened on the market is the chatbots, the underwriting systems, and the artificial intelligence tools working on social media, which companies are now using to actually show people what they have, right down to underwriting and helping them to buy and pay for policies. We do have a few of our companies having these operating mainly on social media platforms, and they are picking up. I think so far they've been using them to sell house owners and householders insurances. Some are trying to veer into motor insurance with them, and it's becoming popular. The other bit is that even Ghanaians outside the jurisdiction who have properties here are now using these things to insure their properties here whilst they are still there, something that would have been a bit cumbersome if they had to use the hard copy paper and pen that we used to have before. The last thing I want to talk about is that the supervisors of the NIC decided to build a motor insurance database, which has been implemented. Mainly what this does is that it helps all the insurance companies to sell insurance policies on this database. So now the insurance companies can sell motor without any paper. Everything can be done on this system. And luckily for us here in Ghana, this system went live just before the COVID lockdown. And so during COVID, motor was one line that didn't suffer much, because during the lockdown, the companies and the brokers were still able to sell and renew their motor policies on this database. And I think these are some of the innovations that we have seen. There are a lot more coming up, a lot more people talking about things that they are developing. But these are ones that have come up so far.
Thank you, Kofi, and that's good to hear. There's a lot of innovation actually going on in the Ghanaian market. And Jeremy, is this typical? I mean, from your research across Sub-Saharan Africa, have you seen in other markets a lot of new innovations coming out as a result of COVID?
Yeah, I think I'm not sure it's as consistent across all markets. I think broadly we've probably seen three major trends. So the first is that there has definitely been a significant shift in the digitalization of the insurance value chain. And I think some of what Kofi spoke about definitely falls into that, where naturally as insurers have been forced to operate remotely, they've been forced to digitalize many aspects of their operations. I think digitalization of sales has been the most challenging, and with a number of constraints. But certainly in terms of operations, policy management, even claims, I think there's been a fair degree of digitalization, and I would suspect that will have longer-term benefits for the industry as a whole. I think the second aspect has been sort of digitalization of supervisory practices, where pretty similar to the industry themselves, supervisors have also been forced to operate remotely and to operate digitally. And I think we've seen some pretty interesting things happening there. I think, forcing kind of automation of reporting, for example, which is, I think, been a bugbear for many regulators to get consistent reporting remotely, has kind of, the pandemic's triggered industry players to have to comply with those things where they may have not always done so in the past. And then, South Africa and Kenya, for example, have implemented remote on-site supervision. And the IRA in Uganda, for example, launched a newsletter as an alternative way to communicate with not just existing industry players, but also like the InsurTech and Fintech space, and to maintain that communication in a time when they couldn't meet in person. And then I think the third interesting trend, and I must admit this is slightly more anecdotal, and I'd be really interested in seeing what CCAF in the publication of their report. But is that I think initially we saw insurers were looking for partnerships with fintechs or insurtechs when they realized there was a need to quickly digitize and to quickly adapt in the face of the crisis. But that as the prudential implications of the crisis have become more apparent, there's been more of a bit more of withdrawal from partnership as they've looked to retain capital, and partnership not really as much of a priority for them at this stage. So my take, but I would be interested definitely in sort of, yeah, like what CCAF finds is that currently fintechs may find it quite a lot more challenging to secure partnerships and new capital in the short term. Sorry about the background noise.
No problem, you are still very clear. We are unfortunately very much running out of time, so maybe I put just one sort of final question to you both, and this is just if you had one piece of advice you could provide to sort of insurance supervisors who want to see more innovation in their market, because we've heard about this sort of 2.8% penetration across Africa. So one piece of advice for insurance supervisors who want to see more innovation in their market, what advice would that be? And maybe, Jeremy, you've just spoken, so maybe Kofi first, and then Jeremy, you speak afterwards.
Well, as I said from the beginning, the thing will be to be open and encourage innovation. And that is not just to say it. We need to look at our regulations, because the regulations are what the tools that we work with. They determine what you can do and what you cannot do. So we have to make sure that the regulations are right and support innovations as much as possible. Should be principle-based, which should allow you to be flexible where you need to be. And Jeremy mentioned a few things at the beginning. We need to build capacity. As regulators, we need to build capacity. We need to understand the digital revolution that is going on. We need to have the skills to be able to understand and see where these are coming from and what they mean for both prudential and market conduct risks. So the digital revolution is actually changing the face of the market conduct risk. Okay, so now consumers are not filling proposal forms with paper and ink. Now they are using voice recognition to onboard. How do you resolve complaints when they arrive? How do you determine when a consumer says, I did not decide to buy this, and then so the risks are changing, and so we need to build capacity as regulators to get to understand the new steps to be able to regulate. We shouldn't build walls ahead of those innovators. We should walk side by side with them and as much as possible engage them in conversation. We shouldn't stop them just because we don't understand what they are doing. We need to get to understand them much more clearly and see how we can manage their risks and get them to roll out their innovations to help us to grow our penetration. 2.8, I must say, is rather on the very high side. I think it is much lower than that, and other work we need to do to bring it up. Thank you.
Thank you, Kofi. And Jeremy?
Yeah, I mean, I think Kofi's actually probably touched on most of the things that I would have said. I think COVID-19, I think, does offer real opportunities, maybe not in the short term, but over the medium to longer term. I think the digitalization of many aspects of the industry, combined with likely consolidation, does offer real opportunities for innovators and innovation to come through. So I think, we shouldn't see COVID-19. There are obviously many negative aspects, but there are some positive sides or silver linings to the pandemic as well for the insurance industry in Africa. And I think that for regulators, there isn't a real opportunity now to try and seize that. And I think one, like Kofi says, to be flexible, to accommodate innovation, but to do so in a responsible way to ensure that consumers do remain protected and that trust is not undermined in industry. I think understanding emerging new risks, cyber, I think even in what Herman presented earlier, has definitely been highlighted as a massively growing concern and something that is important to understand and build capacity around. But then I think proactive communication, which Kofi spoke about, I think especially value for money for what regulators can actually do, just engaging with people, speaking to the tech or fintech community, helping them to understand what are the challenges that insurers actually have, so they develop solutions that actually speak to the problems or the challenges faced by the insurance industry. Speaking to them, to engage with them, to illustrate that you as a regulator are open to discussing and open to helping them to enter the insurance market, helps to send a very strong signal to them that they should be thinking about insurance innovations. I think those type of engagements and that type of communication can be really powerful in creating an easier entry pathway to the market for innovators and tech players, and then also encouraging them to develop solutions solutions for the insurance industry rather than for another industry where they could take their skills elsewhere.
Perfect. I think a very nice ending there from both of you, and some really useful lessons, good insights from what you've seen for everyone else to take home. So thank you a lot for that. So thank you, Kofi. Thank you, Jeremy. And maybe back to Pascal and time for the coffee break.
Thanks, Hannah, and thanks to our panelists. I think Kofi and Jeremy, you've perfectly outlined the very fine balancing act that regulators have to play. As Hannah mentioned, we now have a 10-minute coffee break before we launch into the breakout sessions. We are running at 5 minutes over time, so if people could come back here at 2:50 in 10 minutes, where you will be put into the breakout rooms that you registered for. So please be back here promptly and enjoy your coffee break. Thank you.